Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over a bunch of information from Twitter. I'm going to give you my financial opinion, and we're going to look at some charting. We're going to go in, go across a bunch of different things. I am going to touch on Bitcoin and Ethereum. I'm going to show you something cool about the charts. And I do this with oil, I do it with natural gas, I do it with everything. And that's how I get some of my entry points. I'll show you what I do on one of the things. I'll use Ethereum as an example. I'm not anti or pro anything. I just like the human psychology behind charting, and I think it gets you decent entry points. It doesn't mean that it necessarily has to go higher, but it does give us more information and more evidence of where we are in the cycle. So I know a lot of people are very afraid of Bitcoin, Ethereum. It's going down a lot, and I'm a contrarian by nature. I know a lot of people are like, "Did you see this? It's going to zero." Da 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 da. And I just started playing with the chart because that's what I do, and see if it would actually be a good entry point. And it kind of is. I mean, I look at it and it does align quite well. It's pretty interesting. And I'll go over that. I'll go over some oil. I'll go over natural gas, whatever else I have on here. So let's dive into it. Let's get it right off the bat. It's all from Twitter. Again, if you want to follow me, it's at @finding_finance if you want to follow me on here. So I've got some Bitcoin stuff, and guys, I'm not going pro Bitcoin. I just like talking about it because of the human psychology aspect. I'm not pro Bitcoin by any means, but I just think it's funny. When you hate on Bitcoin, you lose. So this guy is, Bitcoin has no future as a payments network, says FTX chief. This is the FTX chief. Bankman-Fried criticizes biggest digital asset over inefficiency and high environmental costs. That's basically my argument against Bitcoin because of the wasteful nature of energy and the inefficiency of it. Sam Bankman-Fried, founder and chief executive of FTX, says the Bitcoin network is not a payments network and it is not a scaling network. I just thought that was interesting. It's basically parody is the same thing that I would say. And here's Michael Saylor. It says, if it has counterparty risk, it's not money. Well, Bitcoin has counterparty risk. It's called the exchanges, and they can shut these exchanges down. They can shut you down if they want. And I know everybody, it's decentralized, it's this, it's that. Well, you know what? If they had a coordinated effort, FTX was an exchange, and they locked people's accounts for a while. They locked people's accounts. There is counterparty risk. There is a third party that is handling the exchanges. But I don't know, that's just me. Now, here's something. It says Bitcoin entering box number 9. That's it. So this is Bitcoin, number 9. This roadmap was originally issued May 7th, 2022 at the Yellow Circle. This thing's been coming on back. Now, I'm going to do something, and I'm just going to show you something. I don't know if this is a buying point. I don't know how to value any of this stuff. I have no stake in it at all, guys. But I'm just going to show you a pattern that I normally see. All right. This is Ethereum USD. And I've done this with other stuff for buying patterns. So we've got these periods where the stock goes up. The stock goes up. There we go. Stock goes up there. Then you get into these consolidation periods. This is a consolidation period. And what I'm going to do is I'm going to do something kind of crazy. I'm going to take this consolidation period because I noticed something today, and I'm going to move it right in front of your own eyes to the peak of the top here. And what I'm going to do is I'm going to expand it out. Wait a minute. And I'm going to scrunch it up. Wait a minute. What is this, guys? What do we have here? If I can move it over just a little bit more. Okay, tell me this doesn't look the same. I'm gonna kind of stretch this out a little bit so you guys can see what that looks like. So when I look at this, guys, this here is the pullback and it bottoms right at that bottom there. And then if I scrunch it up more, this here is this pullback, and really what we're putting in is the last effort there. That's kind of how it's lined up here. Tell me that doesn't look the same. And what this is this pullback is a scrunched up piece of this pullback here. So what this is called is it's called a fractal, and a fractal repeats over and over. So right now that fractal is aligning actually to be kind of a bottom. So that's not financial advice. I'm just telling you I'm doing stuff and I don't really listen to anyone else. I do not know that asset at all, so I don't claim to know it, but it looks like it's trying to bottom to me, and I think the peak fear is in the markets. Just in, exchanges OKX, KuCoin, blah, 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 to do proof of reserves, letting users verify whether their Bitcoin funds are actually there. I don't even know what that means. I mean, when I read this, guys, I just look at it like exchanges, these exchanges that have weird names, to do proof of reserves, letting users verify whether their Bitcoin funds are actually there. That means their Bitcoins are not there or potentially hidden. Why would you need this? I don't know. Here's copper. It's at a trend line. We've got the downtrend line here. We're right at that trend line, ready to break out of copper. That was something I was looking at. I thought was kind of interesting. When does oil demand peak? I got a lot of oil stuff here. So when does oil demand peak? The IEA graphic below illustrates 3 scenarios for peak oil demand. Net zero emissions by 2050. Peak is essentially now if we were to get to 2050. APS announced pledges scenario peak by 2024. Steps stated policy scenario peak by 2035. My estimate is that we are going to consume every drop of oil that we can. Because it's the #1 master commodity, and it's not just used in burning things, for energy, for transportation or something like that. It's used all over the place. So I don't know when the peak is. Doesn't really matter. But this is their estimates. When does demand? I think this is going to be supply driven, not even demand driven. That's what I think. It looks like 15 is done. A retest and resumption from breakout close to confirmed. So this is exactly what I was seeing in this movement of oil. So what happens is we go in through these cycles, and then the cycle repeats again. So this is the Livermore cylinder. We broke out up. We were gonna launch into the atmosphere for oil when I thought we were going to. And what they did is they delayed this move. They released the strategic petroleum reserves. They did a bunch of stuff there. And what we did is we actually did a consolidation. And we consolidated downward. We have a trend line here. We've broken that trend line. You've seen it on all my things. And we've pulled back here recently in the very, very recent time. And number 15 is basically saying that we're done with the pullback. Very similar to what I'm seeing. And we're just moving around. And people are scared. They're afraid because they're looking at the short-term price movements. What needs to happen is you guys need to get the confidence. You need to start looking at these charts and saying, hey, look, this is a bottom. I'm going to start accumulating in certain sections. And again, this is where, I set up the finding-value.com, the platinum membership. This is where this all comes into play. Is we talk about this, we look at companies, we find what's the leverage ones, and we look at all that stuff together. It is a community to help you become a better investor. But I'm going over this so you guys can see this. You can use it for whatever purposes on your own. But I'm just showing you guys this information. Here's another chart, and I'm showing a lot of charts to show you guys differing opinions. It says U.S. oil update, same sentiment and same question posed in my 8th of October post remains no change in limbo. This guy still thinks that 57 to 68 is still in scope, all part of a bullish structure from what I can see. And these are different people, and what people are doing is they're looking at all this information, trying to chart different techniques on this. Now, I'm not in this camp, and what gets difficult with these structures is you don't know how far it pulls back. You don't know if C is complete, which I think it is. This guy says C could be at 57 to 68. Who's right? The answer is no one's right. No one is right. We can't predict future price moves with certainty. And when people look at all these different charts, what you do is you come up with probabilities of what could potentially happen. Now, I think that this is probably, he's using Elliott wave 1, 2, 3, 4, 5, and then he's using an A, B, C correction. And I think it's complete, but you can obviously argue against that. And what people usually do is they'll take one pundit and say, what do you think about this? This pundit says this, therefore that pundit is true. There's all different opinions on what is going on going forward. The reason I don't think we're going to get that low is I think we're going to get a massive cutback in supply and demand is far too high. I think our inventories are too low. So I'm a hybrid. I'm not just a charter. I'm a hybrid between the fundamentals, which is the inventories. I'm a ratio guy, and I also look at charting. It's a combination of all of those things. You will become far more deadly doing that than just by looking at price charts, in my opinion. Here's Dan, whatever. So China domestic air flights weren't down week over week, but a modest week over week plus 10% to 63,000 flights. Next 4 weeks, it's set to rise by 50% to 95,000 flights. But 2 weeks ago, the forecast was 127. Perhaps the start to some modest week over week increases. And this is the Aviation Indicators Weekly of China. You can see this gigantic demand coming up for oil in its jet fuel demand and the number of flights. And this is obviously a projection. And we're just looking at projections. We're looking at the demand out there. And I think oil looks absolutely incredible. When I look at the demand coming in front of us, it's high. When I look at the charts, this is what I see. This is exactly what I see. I see a trend line coming down, another trend line coming up, and we've completed the cycle. We've broken the downtrend, and that's a retest done and a move higher. That's what I see. But you obviously can have other viewpoints and other things that you can see in the markets. And I also see the demand out there. I've seen that demand for oils increase from China already from their flights and their seaborne shipping. I see it across the group of things that I watch. Here's more data that I'd like to talk about. It says, by historical standards, we are back to normal. If you want to bring up the SPR, watch the video in the pinned tweet. Prices declined, inventories up, OPEC Plus defended 90. SPR releases worked. They did for a short period of time. They're looking at just the U.S. commercial crude oil inventories, which some people are looking at. And what they're seeing is a crude oil, commercial oil inventory that is normal. Normal. But what's going to happen is this is going to draw down as the SPR is not releasing anymore. So we're going to see this work its way lower again, and prices should go up. That's my thought process behind all this. But that's what some people are focusing on. I'm thinking demand coming back from China and inventories declining from the non-SPR releases anymore, that they're not releasing. Peter's completely right here. He says, nasty day for risk assets as crypto crash spooked markets. When dust settles, the direct implications for oil and energy are minimal. We remain constructive into year end and will add on weakness. Don't dump quality companies into a weak tape. Nothing changed for oil. Completely agree. The latest EIA Gov crude oil and refined product inventory data. This is what it is. So this is what people are seeing with the commercial oil inventory, which we saw on that last slide. It's kind of in the normal category here because they use the SPR releases. The inventory is 5.6 million barrels above the 5-year minimum. Inventory for gasoline is down minus 4.7 million barrels below the 5-year minimum. So gasoline's getting eaten up. We can also see that distillate inventory is way low outside of its normal 5-year average. We've got the United States Cushing inventory, which is right on the minimum. It's 0.9 million barrels above the 5-year minimum. Now, when they stop the Strategic Petroleum Reserve release, this goes berserk. It goes berserk, guys. We are going to be eating through our inventories over here. And this is the United States crude oil balance. And this is going to start to come and pull down. So that's what we've got there. This is the United States SPR plus the commercial oil inventory from 2017 to 2021. This is what people are not seeing. They're just saying, oh, they're looking at the commercial only. But when you take this into account with SPR, it is game over. We're coming down, guys, 208 million barrels when you look at this. This is going to get real interesting very soon. It says, just bought an irresponsible amount of Joy. That is a company, oil and gas company. Still experiencing a throwback out of the consolidation diamond pattern. May, in fact, be a half-staff pattern developing where the in trend is mimicked in the breakout. Still holding to the price target of $10+. And what this is a gigantic diamond pattern. This guy is doing it on a 1 hour. This is on a 1 hour. So this is zoomed way in. We've broken that diamond pattern up to the upside, and we've got a large move ahead of us. He's thinking $10, and this is a short-term price projection. Now, I don't know if he's going to be right. He's got a $10+ by year end, and we've broken out of the diamond pattern. This is similar to what I was seeing with a lot of the charts, and we could be doing a back test. What do we do on back test, guys? We know what to do, and I'm not saying Joy. I'm saying get your favorite companies, get them on your watch list. Look for buying pressure. That's what I'm going to say. And that's what I'm doing, at least. I'm looking for buying pressure. I'm going to be accumulating in my favorite companies. And you guys know which ones those are. It says U.S. weekly inventory data matching the global trend. Another week, another record deficit. We remain bullish. We're continuing to eat through the deficits. This is all deficits under this zero line. Deficit, deficit, deficit. And we are eating through those deficits at a left to right, downward right move. We haven't even come up with much relief. There has not been much relief here. And that's why I think they're raising interest rates so quick, is to try to slow this thing down. And just a reminder, midweek updates are released on the website. This is OPEC plus production may have peaked, at least until they drill a lot more. OPEC plus total production levels may have also peaked, given difficulties in increasing monthly production sufficiently to meet quotas. In a scenario where production were to remain flat from here, there may be a 3.3 million barrel per day long-term production shortfall versus expectations. We're seeing all this data come in where inventories have been propped up using the SPR. Now it's coming. It is coming. This is the projected, this is spare capacity estimate. We could see a 3.3 million barrel deficit. This is OPEC plus quota pre-cut, OPEC plus quota post-cut, and then OPEC plus production, which is down here. And this is the post-cut there. So we could see a pretty big deficit here. Get ready. Buckle in. That's why I said that we could see a move here. I'm seeing the charts break these downtrends. I'm seeing crude break downtrends. We've seen a little bit of short-term selling pressure in the markets. Sometimes they get people thrown off to the wrong side. And another month, another big OPEC plus oil production miss. OPEC plus missed its October 22 production quota by 3.31 million barrels a day, according to the third-party surveyors. Big misses, guys. I don't know if they've hit peak oil. I don't know if we're just living on borrowed time here or what. If that is the case, we could be living on borrowed time, where like we don't have the production out in the future. So again, I'm taking this as an advantage to accumulate. That's all I'm going to do. I'm gonna wait for strength and accumulate. But that's what I've got today, guys. If you guys need help on identifying companies, definitely check out finding-value.com. Become a platinum member. You can ask me questions this weekend, Saturday, 7 a.m. Mountain Standard Time. If you need help. If you guys like the content, give me a thumbs up and subscribe to the channel if you haven't already. All right, guys, we'll catch you later. This is Finding Value.